Governor, President, welcome. Good to have you with us.
Thanks. Great to be with you, Tyler.
So I expect you, I would anticipate that you will say you expect the Fed to go a quarter point on Wednesday. And then what?
Well, I do expect them to do it because they haven't done anything to deter that view, either in the markets or the public. So I think they will follow through. But then I think they are going to have to pause. I mean, the data that's come in since they started moving rates down and reducing some of the restrictiveness of policy really have said that the economy is strong. The fears about the employment part of the mandate have sort of lessened. In fact, employment's holding up pretty well. And the inflation news hasn't been very pleasant in this holiday season. It's basically stalled out over the past 3 or 4 months, any progress. So I think they're going to have to sort of stop, beginning of the year is a good time to stop, reassess things, and then see what they learn about where the economy is headed. Is inflation going to resume downward path or not? And then we may get some more clarity about the fiscal policy actions that we know will be occurring.
So if you do a cut in December on Wednesday, and then you pause in January, you're really getting up until late March before the next meeting, right? So that gives the Fed 3+ months, basically, or 3 months, 3 full months, really, to evaluate the economy. And in the middle of that comes a new administration.
Yeah, but that's what you kind of want to have the Fed. The Fed doesn't have any impetus right now to hurry to get back to neutral, right? The economy is doing really well right now in terms of its dual mandate goals. And so it gives them a real opportunity to really take their time, look at things. One of the other uncertainties out there is just how restrictive policy is. And there's a lot of reason to think that the level of interest rates is at neutral is higher than it was pre-pandemic. So again, I think they have the opportunity here to really take some time to assess things and get a sense of where the economy is headed. And of course, we always talk about these things as if the economy is going to look what it looks like without any other shocks, but there could be other shocks in the economy now going forward. And so that's also what they have to keep in mind is policy well positioned so that no matter how the shocks occur, they're in a good position to set policy appropriately.
So if we're in that really sweet spot position, which I'm hearing you say, why do anything now? Why not just pause now? Or is it because, well, the Fed hasn't really exactly prepared the markets or investors or the world for a pause yet, and he may do that in his press conference or the message on Wednesday?
Yeah, Tyler, I think, the Fed doesn't want to surprise everyone. And frankly, whether they pause in December or pause in January is probably much less important than what kind of communications they accompany with the December meeting. And you're right. I think the press conference and the new survey, the summary of economic projections that'll come out in December, give the chair the real opportunity to explain sort of here's how we're seeing things. There's some upside risk to inflation, given that we've seen some little firmer inflation readings than we'd like to have seen and expected to see. And at the same time, the labor market, the downside risks that we were concerned about in September when we started have eased off. We're still watching. We're still having to care about that part of the mandate. But those risks have changed. And that change in the balance of risk means that we're likely going to be, really taking our time to assess things. And I think if he gives that message in the press conference, and I am predicting that the SEP will show fewer than 4 25 basis point cuts in 2025 that we got in September, then I think that's a strong message that, we are assessing things. We do have both parts of the mandate in focus, but this is a good time to pause. One way to think about it, Tyler, is that, remember, they moved 50 to start with in September, and I interpreted that as they wanted insurance. It was an insurance move against the downside risks they were seeing on the employment part of the mandate. If you were to pause either in December or which I don't think will happen, but if you to pause in January, think of that as an insurance move, an insurance pause against upside risks and inflation. And that's how I think about it.